The market dropped sharply as expected. Can the bulls hang on? This is Invest with Jacob. Okay, guys, so in last week's video, I told you that as long as the bears held 45.70, we had a setup for a move to the downside, and that's exactly what we saw. The bulls failed to break through, and the bears left them in their wake, taking out the entire week's gains. Now the question is, can the bears follow through? I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the Nasdaq. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, with the bulls failing to break 45.70 and the bears taking control, we now have a setup for a bigger downside move. So let's jump into the charts and take a look. Okay, guys, so here we are on the 1 hour futures chart for the S&P 500. And last Thursday, many of you were quick to jump in and say when we broke this high here that my path had failed and that the primary count had failed, when I simply told you that if they moved higher, all they had to do was hold 45.70 and we still had the same setup to the downside. And that's what we saw. And this is why it's important to understand key levels. Until 45.70 broke, the bears were still in control of this market. We have a 5-wave move down for a wave 1, and we have a clear 3-wave move up. This is a clean setup, and then we got the downside move. So understanding key levels, how Elliott Wave works, and that just because a high breaks doesn't mean that the downside move is over. It means that we have a slightly different setup because all of these moves are fractals. That means that this looks like all of an ABC up for wave 2. However, it was all of an ABC up for A of 2. Then you got B of 2 and then C of 2 up to complete the move. And now you have a 1 of 3 to the downside. So from here, we're kind of in a key area. We would expect a wave 2 of 3 here back up toward the 45.30 to 45.50 area for that wave 2 bounce. We would expect that to be 2 of 3 and then come down and break the pivot. However, they are sitting right on the 618. That's where they bounced, and that is a typical wave 1 of 3 target. You would expect the 0.5 or 618 to hold, and that's what we're seeing. But on the Nasdaq, when you see that, we'll see something a little bit different. So they are on a key level as the 618 to 764 is the pivot to the downside to get us rolling. And so if the bulls cannot push up off of here and give us a wave 2 bounce up into this 45.30 to 45.50 area, which would be a more standard Elliott wave count, we could see a direct break of the pivot at 44.80. And if that breaks, we would look for a pretty strong move down to the 44.27 area in a pretty direct fashion. They need to break through 44.53 first, but typically we would see 44.27. Then we'd look for a bounce back to test the pivot, and then a move down to the 43.84 area to complete all of wave 3. From there, we'd look for a 4.5 down to that 4,300 area to complete the C wave down that we've been talking about since we failed this 5-wave move down. So remember, this became a 3-wave move. Then we got the B wave bounce, and then we got the 1-2 setup. All of this is played out pretty much as we've said. The pivot's broke in both directions, and when that happens, the moves fail. So what we're looking at is continuation of this downside move. And should they follow through with this pattern, we would be looking at this 4,300 area as fairly important, and 4,200 on the SPX is fairly important. So you got about 100 points of downside difference. If they break 4,200 SPX, then it becomes very ugly for the bulls, and we could be looking at a much bigger downside move. Over on the Nasdaq, we have the same setup. We have the A and B, the 1 and 2, and then the wave 1 of 3 down. So off that top, that is A, B, 1, 2. And as I said, the Nasdaq does have a potential 5-wave count down here for an impulsive move. Now, A waves can be 5 waves, so it's a little bit different. And that's why it's important that we get a full 5-wave structure down, which means that this would be a 1 of a wave 1. So this would be 1, 2, then the 3, 4, and 5 to the downside to complete a bigger wave 1. Then we could understand that we have a major top here, and we'd be heading to a very low number on the Nasdaq. But for now, we are going to take what we see, and what we see is more of a corrective structure overall, where this is A and B, and then we'd be looking for this C wave down into the 14,400 area. And from here, the bears have pushed below the 618. Now, typically, the 618 and 0.5 extensions, as I said on the ES chart, are targets for wave 1 of 3. You see them come into that area, and then bounce. And the reason for this, if you'd like to know why Elliott Wave works and why it's so powerful, is that you have support almost always at the 0.5 and 0.618 when you get a bounce. So you move down to set a support level where they bounce the first time. Then you come up in wave 2. Then wave 1 of 3 comes down and tests that support, which the 618 comes down to test that support and the support right here. You look for a bounce off of that support that's a little bit weaker. And then the third time through, and this is why 3 of 3s are so powerful, they come down to that area for the third time. They hit, they chop in the pivot, and then they break through. And this is why wave 3 of 3s are so strong and why Elliott Wave is so good at being able to look at these types of moves and give you targets and breakthroughs and those types of things. So we have pushed through the 618, which is a little deeper than you would see for a wave 1. So it is possible we get a more direct move down. But for me to be on board with that, they would need to break through 15,345 in a direct manner. And if that's the case, we would look to 15,228 next, but more likely 15,100, 112 to be exact. And then you'd look for a bounce from there. So the Nasdaq is hinting at a more direct move down, but it still needs to break through the full pivot at 15,345. Otherwise, we'd expect the standard bounce back up into that 15,530 area for a wave 2, and then 3 of 3 to the downside, and then 4 and 5 on down to that 14,700 level before bouncing and coming into that 14,400 level. So both charts have a setup to the downside that's pretty strong. They're at the pivot. These are great risk-reward trades. When you get the wave 2 bounce and they start to come down again, you can set your stop at the top of wave 2 and look for the break of the pivot, and then move your stop down to the top of the pivot so that you have a clean, impulsive structure to the downside where you have your stops set to make sure that it follows through. Guys, if you love the information I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link, and it will take you right over to the website. Once you're there, check out our membership plans area. We have 2 incredible plans, and both of them come with a 7-day free trial because I want you to get in there. I want you to become part of the trading team and make sure you love it before you ever spend a penny. You can cancel at any time. We also have our Elliott Wave for Beginners course. This is helping real traders make real money and finally understand the market in a way that makes sense to them instead of the news cycles that give you bad news when the market goes up and vice versa. It is 25 videos where I go through 3 different parts. The first part is our introduction, where I go over Elliott Wave expectations, mindset and emotion, why it works, and the KISS method. We also have our chart setup and tools, where I go through every single tool you need to use along with Elliott Wave to give you confirmation of what you're seeing on the chart, as well as the Elliott Wave for Beginners portion, where I go through every wave, the pivot, corrective depth theory, theory of alternation, corrective zigzag, all these different things that you need to know to understand Elliott Wave theory. The really cool part about the course is it is included in both of our monthly rooms. So if you don't want to buy the course directly, you can join one of our monthly rooms, and in there you get it for free. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go over exactly where we are on the counts and what to expect, as well as the training material you just saw. We trade the SPY and the QQQ, and we swing trade, which means our trades can last anywhere from a few days to a few months, so we don't trade quite as often as a day trading room does. However, if you are interested in day trading as well as individual stocks, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, day trading, and PT's reduced risk binary method that just crushes the market. He gets you in at a cheap price and gets you huge multiples on your money, and it's how he structures his trades that's so unique. Something you really have to see to understand, and that's another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account, averaging 3 to 4% gains per week, trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we would love to have you in these rooms so we can all make money together. Key takeaways for today. More standardly, we're looking for that bounce back up into the 45.30 to 45.50 area, and then a very strong move to the downside that breaks the pivot through 44.80, targeting the next low, which would be 44.27 before our next bounce. However, if they do break 44.80 directly, it does indicate a more direct move, and the Nasdaq is hinting at this. So a more direct move would take us toward that 44.27 in a more direct fashion. Over on the Nasdaq, we have the same type of setup, a 1-2-1, where you would expect 2 to follow into that 15.530 area. From there, we'd look for a break of the pivot at 15.345. However, if they move directly through the pivot at 15.345, we would expect them to move more directly toward the 15.112 area. That is your market update for today. I will talk to you tomorrow.